for a bit more on reaction to the market reaction to Powell, what we heard from Powell, Powell's tone overall. We're joined now by Peter Tchir. He's the head of macro strategy over at Academy Securities. So Peter, you kind of flagged for us, his tone may be a little bit different than in recent meetings, and maybe a sense that it's more difficult perhaps for Powell at this stage to articulate exactly where he sees, the Fed going over the coming years.
So I think we've learned a couple of things. One is the Fed is going to support markets. We already knew that. That was a little bit of a yawner. I think what I found here was he talked a lot about the economy, projections, models, when interest rates could go up, how inflation is going to behave. And I think both the markets and even the audience were kind of like, he has no more knowledge about that future path than we do. So I think people are taking that with a grain of salt. With that in place, I think we have to say that yields are going to head higher. We're going to see long end yields go a little bit higher, not dramatically, but they're going to drift higher, and you're going to want to trade your portfolio around that.
And then I guess, Peter, just overall, as you think about where the Fed sits in the conversation right now, is it still as important as it ever was? I mean, how are you to think about the Fed's action? You mentioned it's not that interesting. They said they're going to be accommodative, but they've been the main driver of markets now for almost 15 years.
They certainly have been one of the main drivers. I don't think the only one, but I think what we know is they will offer some sort of support, right? If we see anything go wrong in commercial real estate, residential real estate, mortgage-backed markets, they will intervene. They will up their purchases and they will do something. But I think right now, at these kind of levels that we're currently at across the board, we're at the limits of what they can do. I think even Powell was saying over and over, right? To get true growth, true stimulus, it's got to come out of DC. That's what we're waiting for, I think, for that next real growth leg.
And then, Peter, just broadly, as you think about markets right now, where we stand in the cycle, maybe even backing the Fed out if that's possible, what do you make of as we head towards the end of the third quarter? What trades are attractive to you, and what are the main themes that you kind of see as driving the conversation here?
I'm continue to look a little bit at this reversion trade. We seem to get it some days, then it gives up. Yesterday was a very bad day for the reversion trade where financials did poorly. I ultimately think we are going to see ourselves emerge from the COVID experience. We are going to get growth. We are going to get fiscal stimulus from DC. Again, I talk about three types of fiscal stimulus from DC. The first is Band-Aid stuff. That's really what we're getting right now, where they're attempting to make people whole. That doesn't do that much good. We either need to see infrastructure spending or some sort of supply chain or manufacturing rebuild spending. That probably doesn't come till next year. I think that's what we need. And as we get that, I think banking, real estate, energy, a lot of the beaten down sectors could do pretty well. And I also do like commercial real estate ex the big cities.
All right. Peter Tchir, head of macro strategy at Academy Securities. Peter, always great to get your thoughts. Thanks so much for joining the show today.
Thanks a lot for having me.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.